So when it does diverge aggressively like this top edge and like this bottom edge, you must know about it, guys. You must deal it. It's a very good divergence to work into. So you can see when those puts came in, there was no way that was happening, right? There was no way, because this was all taking place in the futures markets. Where is it in the stock market? It doesn't exist. So you're starting to look at that stock market and say, wait a second, this is all wrong. This is a buy trade. This is all wrong. Sure enough, it was all wrong. And then when we came up into the top edge, you can see that divergence working beautifully into those higher prints up here. And that's the massive volume you can see in the futures for that sell-off. When it comes back down into the bottom edge, another value divergence into that same price. And then it rips hard to the upside. Very strong rip harder to the upside at that stage, isn't it? Very good trade. Now, the other thing you could obviously look at is our old friend, the Prem. So when we look at the Prem, the big question is, are we seeing any buy programs coming in these areas, for example? Well, the answer is yes. It's all buy programs. Look, it doesn't show anything other than buy programs in there. So the Prem picks up the thread and really pushes the price through those areas and really runs the trade higher at that stage. It's a good one. It's a good one. The banker, yeah, the banker trade is the at high low, because it's such a positive, strong correlation. It's one of those no-brainer type trades that if we get a divergence on the highs lows, we know that we've got a trade. We've got a definite trade opportunity, because this shouldn't diverge ever, really. It's obviously got a bound to the top side, so it is bullish if it diverges. But if it's diverging and it's moving, then we've got a real big trade, because obviously it's got an upside on it. You know, the price can keep going higher with. That's not what divergence looks like. The divergence is the blue line moving, not the price. Blue line moving, not the price. So when the blue line drops here, that's divergence. When the blue line rallies here, that's the divergence. When the price is rising here, that's not divergence, because the blue line has an upside boundary, remember. It's the same as the tick, for example. The tick has an upside, and this is the same as the Prem. The Prem has an upside. They can't go any further than the total number of issues, of course. So you can see when this is dropping, if this candle here, for example, was a spinner or a blue candle, you could have sold that candle dead easy, and you're almost guaranteed that you're going to make some cash off of that little trade there. The bond, well, it did okay. We came off the bottom edge at 4s. It's traded a high print of 20s. Congratulations. It's been a slow burner off the bottom edge, and it's pulled in a belly bid again. It's running as a positive correlation today, which is bizarre, but it is what it is. Gold a little bit overpriced into the 25 top edge, so watch that for opportunities on the offer, guys. Nice trade if you've taken it already.